Testing 1, 2, 3. I'll just resume the recording. I think we can start. Okay, guys, you guys are ready, yeah? So let's make sure. Okay, I'll just do it this way. Perfect. Okay, so let's start. There we've got people coming in as well. So brilliant, good. Hi there, Reza. How are you doing? Okay, so welcome to today's webinar. It is a recorded webinar, and for those who are new, my name is Kenny, and I represent Errante as a market strategist. Today is the 15th of July, 2020, and we have got a couple of trade ideas, especially to share with you. So I just want to carry on with what I've just mentioned earlier on about trading dot. I put all my analysis that I trade on Errante's real life account. And they are all actual trades that I take as well in my personal account as well as on Errante's account. So as of just now, today, this morning, I traded the AUD USD on a pending order. I'm not sure whether it has been triggered or not. It could have been triggered or very close to trigger on a buy for AUD USD. So for those who haven't actually registered on Trading Dot, it's free, just like my FX book and all that. It makes it simpler for me as the mentor and the strategist to actually share my trade ideas so that you guys can actually copy, can actually look at performances, type of trades that I do, my strategy, and learn from there. And either you follow or you learn how to actually trade the market using geometric patterns and various other styles of trading. There are also loads of traders out there within Trading Dot. So Trading Dot has got about 15,000 traders, members, and they are all free members. They don't pay anything to Trading Dot, especially traders. We don't pay anything. Okay, so but we can actually earn from putting nothing. We can actually earn money from Trading Dot. From the TDC. So the TDC is your Trading Dot coins, and it is connected to Errante. So what that means is that if you attach your real life account of Errante to Trading Dot, I will tell you guys later on how you can do that. If you don't know already, it's quite easy. And once you have done that on a real account of Errante, what happens is that the more active you are on Trading Dot, just by sharing analysis, sharing my analysis even, or you putting up your own analysis, screenshot and whatever, you'll be earning TDC. TDC stands for Trading Dot Coins. Okay, so if you have not attached your account to the real account in Errante, then the TDC remains only as points. Okay, and not coins, only points. So but once you've attached it to Errante, whatever you see there can be translated and will be converted to real coins, like Trading Dot coins, which can then be converted to real money. Okay, so every 0.1 lot you trade on Errante, okay, because this thing is given by Trading Dot. So I have a close connection with the owner of Trading Dot. So we have made a bit of a collaboration whereby he is willing to convert what you call that, the coins to fiat currency for you guys. So for those who have actually attached the Errante trading account, whatever you see in your TDC as earn, you can then convert it and withdraw from Trading Dot. You can actually withdraw in cash. Okay, so 0.1 lot traded, that means it is $1 per pip. Yeah, you will get one TDC. So every 0.1 you trade, you will get one TDC, and one TDC is $1, $1 US. So it's quite good actually. So me, I have already earned there that number of TDCs right there. So that can then translate to some dollars already. Okay, so here we go. This is quite good because it's quite easy as well to do. So this is just an extra sort of flow for you guys. Yeah, hi Riza. I'm very well, thank you. Good. So yes, we'll get to gold. We'll get to Euro USD as well. No problems. And yeah, we'll review it right now. Okay. So just before that, before the gold, analyzing gold, analyzing Euro USD as well. I just want to let you guys know we've got some good trade ideas that has actually gone quite far as well with Euro Canadian dollar. Especially on the 4 hour and the 1 hour as well. You guys can go into a shorter time frame. We've still got maybe about 100 plus pips to gain potentially from Euro CAD movement to the upside. So it's doing a little bit of correction, but then it's going back up again. So with Euro in general, we are looking at lots more of upward trend because of the money. The quantitative easing I've told you guys about yesterday has already finally kicked in. So we're looking at a lot more bullishness for Euro crosses, including Euro USD. So also apart from that, because of China's situation is actually improving, there's a lot more businesses coming through and a lot of other things. It is actually impacting the positivity of Australian dollar, and then at the same time we have got some improvements as well. So we are looking at some buying opportunity for the Australian dollar versus the USD, but not only because AUD is getting stronger. AUD is not really getting stronger. There's some small improvements. It's because of the US dollar getting really weak. Okay. All right. Now let's get back to the chart. So let's look at Euro USD first. I will look at Euro USD. Now, before that, we go on to let's go on to the, give me a second, guys, Action Forex as well. Okay, so I just want to take a look at the heat map. You know, a lot of you guys are asking about heat maps as well. I can see it in the GTI group, which is good. It's a great tool. I mean, a lot of free tools out there, but you want to combine the tools with your own analysis and not just use the tools or the heat maps alone, because it can be very risky to just rely on heat maps alone. Okay, so here, for example, generally, if you're looking at euro itself, right, you can see that euro is quite mixed at here, but then euro against the USD seem to be really bullish because of the dark blue. So if we go onto the euro, you can see the euro on USD, it is predicted or expected to actually be very bullish, especially from the daily chart onwards. So medium right up to long term, it is looking like it's quite bullish. But how do we actually confirm this? This is where we need to get back to the chart. So we go back to the chart, but before just that, I want to go on to Action Bias tool as well, because it's a free tool and it's not too bad. As you can see, Euro USD is seen to be really, really bullish. So let us confirm this. We don't want to just use that and then trade straight away. We want to make sure that what we are looking at as just a hint can actually be confirmed by ourselves, especially by looking at the charts. Okay, but the charts, you want to, how I always do it is, I always like to look at the trend on the daily chart first, and then it doesn't mean that if it's daily chart, I only trade long term. No, I can also trade short term, but I want to look at the daily chart first. Okay, so I just want to make sure I clear off my chart right here. Let me just also click this and let it go. All right, now, as you guys can see on the 1 hour chart, looking really, really strong. The price at the moment is 1.1441. Now we are challenged by price action trap between two psychological numbers. You guys know it already. 1.44, 1.1450. Okay, I'm just going to draw two lines. Okay, two lines, 1450. Okay, so 1450 is above the current price. What's under the current price is 1420. Okay, so 1420 is your next psychological level. So what that actually means, very, very simple. If I want to sell, I need to wait and make sure that the price goes under 1.1420 psychological level. Then you've got more sellers coming in. Then you are better off in selling at an ideal price. Okay, so at the moment the price is just not quite right for either buy or either sell from price actions perspective. So if you want to actually buy, then you're looking at buying at 1.1460 and above. Okay, so we only adjust it to the psychological level only once, so that we know where it would break out from to give you the momentum. But then from 1 hour chart itself, it looks like it's got a very nice look of bullishness because of the three lines that I have. I've got the 50, the 100, and the 200 EMA, exponential moving average. I've also got the 8 and the 20 EMA as well. And because all the prices are above all these 5 lines, it's just giving me a lot of indication of bullishness. We've also got in Telegram. Yes, we can, of course. I mean, this Reza, this webinar is actually recorded, so you can send me an email, and you can go through Errante, and as a client at Errante, you get all the access to the webinar recording as well. So yeah, we can do that, because this is actually a sponsored webinar by Errante. So that's basically why. So I do actually share it. We can share it in Telegram group as well. It's no problem. Okay, so this is basically, it is looking like we've got a lot of bullishness going on with the 1 hour chart. I want to do it in two perspectives, meaning that price action and also patterns. We've got various, we've got all this ABCD going on as well, and we are looking at a good run of the bullishness to the upside. But right now, at this moment of time, if I want to buy, I would prefer in buying it at 1.1460, not at the price now. The reason is because the price now is trapped between two psychological levels, 1.450 and 1.420. So there may be if the market wants to reverse and create a correction, they usually create a correction at either one of these numbers. Okay, so we want it to actually go above 1.1450, so 1.1460 would be a better price. Now let's go to the daily chart and look at all the areas that we need to be very, very careful with. Now look at this, guys. Yeah, Euro USD on a daily chart. As I have actually based on psychological numbers, I plotted 2 lines, correct? And I plotted the first line, the top line, which is based on 1.1450. But 1.1450 coincidentally is at the body of these candles here, which is a very significant resistance level. Okay, so coincidentally, so this tells me that anything can happen now. Now, will it be a correction right now? I mean, of course, we're based on the daily chart right now, but then where the candle is, it is just too close to where the 1.1450 is, maybe 1-2 pips away only. So it can still happen. A reversal can happen at any moment of time. So what I would like to show you guys is to look into using RSI as a divergence, convergence type indicator. And what does divergence mean? Basically, you can use your RSI very simply to actually look at divergence, meaning that if there are a mismatch between the RSI or even stochastics, you can use it with the price, then it can actually tell you that it might reverse anytime soon. Okay, yesterday divergence on the 4-hour didn't happen for the Euro USD. I think it actually happened a little bit, but I can't remember where. It did actually happen. There was a bit of a reversal, but this is the downside of the indicator. It may not give you the impact of the reversal. How big the impact is? Sometimes it's like one candle, or maybe just a little bit of reversal there, and then you could hardly notice that if it were to be a small candle. That is the one downside of a reversal. We don't know how to measure whether it's a true reversal with 50 pips reversal, 100 pips, 1 pip reversal. We just cannot tell, but we can always tell by looking at price action. Price action can actually be more accurate, especially by using the psychological numbers. Like, for example, right now, let's look at potential, whether or not it could actually happen. That's the reason why we need to be very, very careful. If, for example, now prices are going up, all you need to be careful about and thinking that when can it actually reverse. So it should already be in your mind that it can actually reverse without the psychological numbers, without the divergence. But you just need to think like that when something is going up looking really rosy and really strong and bullish, you need to always ask the question of where can a reversal be. So we don't want to be sort of overexcited and get really optimistic. And sometimes people say, in trading you have to be heartless. It's not about heartless or being emotionless. It's just able to expect the other side of the story. From looking at one story, oh, bullishness, really nice on the daily chart, because we are looking at one candle here, and we go into the daily chart, and then you look at it being really bullish as well. Of course, it then mirrors what goes on onto the lower time frame, like the 1 hour chart as well. Now here you've got ABCD going up. You can actually apply the ABCD principles as well. So the D point is your reversal area, and the D point could also be attached to the price action psychological numbers. And then if you use that kind of formula more than you actually use divergence, because divergence at the end of the day, what it is, an indicator. And what is an indicator? A lagging indicator. So hence the reason. So always price action, Fibonacci and all that are a little bit more leading for me as opposed to the lagging indicators. Okay, so here, for example, as you can see, it's already starting to weaken, perhaps, or trying to flirt with the line at 1.1450. So yeah, this is why I like to plot the lines first, just to prevent you as traders, or even myself, to be overexcited with what's going on at the moment with the candles, because a lot of traders out there, they're actually trading with a single candle, and it's very risky. A single candle is not a trend, okay? And a trend need not be looked at only in one time frame, which is again a very dangerous thing to do. Okay, so hence the reason I rely a lot on time frames, higher time frames as well, and then we need to look at things from various perspectives. For example, when I looked at EuroCAD, now on EuroCAD, it has a bit of a curve, like a cup as well, and it's clearer, a cup and handle pattern on the EuroCAD, which I have already shared on Trading Dot. But then when you come to the Euro USD, it did shape like a cup, but then didn't end up to be a cup and handle pattern, because this area here just went through the roof, through the mouth of the cup potentially, and now it's actually above. So it's not a cup and handle, but it could potentially be a J type, what do you call that, a J type pattern, which usually means that if it continues going up there, it might create another J, and then it keeps going up. Okay, so you've got like a J here, for example, you see, and then it just continues, and then it makes another J as well. So where it makes another J, that is a little bit difficult to predict totally. But then if you see this down move right here, if I were to also use Fibonacci and pull it from the top to the bottom here, that itself gives me the indication of where it might actually reverse at the 100%. The 100% reversal using Fibonacci is also your double, how you call it, double top and all that. I don't really know names so much, but then, because I am more into the geometric patterns and harmonic as well. So here, this one here could easily be sort of like a double top, if at all it start reversing at the 100 area. So let's also apply the oscillator RSI, sorry. Let's go here. I've got my 50, 30, and 70 levels as well. The other thing is really important for us to understand is that when you use your RSI to look at divergence, now here we do have a little bit of divergence, right? Because you see we have got, oops, we've got a high here, right? Sorry, this high here, but then this one here is you've got a higher sort of high in terms of price action itself, but it is too early to know that that is your area there. But then you know why? Because sometimes if you want a high, you need to make sure that your high there has got at least a reversal made up of two candles down. Then you can say it's a reasonably a solid a solid reversal and a peak or a high. But here, for example, the high is still going higher, right? So because it's still going higher and still moving, it hasn't created a peak yet. Okay, so that is basically the reason why I want to be really careful. But then from just the way it moves with the candles and everything else, we do see a potential for it to break out the 1450. But how do we also know this is to look to the left. Now, when we travel to the left, I would like to look at where the current candle is now. I would like to know whether or not I could spot a single bullish mother candle. Okay, so this is quite key. I've been using this kind of way quite a long time, and I find it quite effective because the single body of a mother candle does actually give us a lot of information about how strong the trend, not the trend, but the buying power or the selling power, especially on the body of the candle. So here, for example, we did have at some point, let's see when that was, 24th of August 2015, we did have a single bullish mother candle that actually from the current price itself, it has appreciated to about 161 pips. So 161 pips is quite significant for a single body of the candle, and it's not even complete, the whole complete body. It's just from the price now, okay, and until the end, until the closing price, there is about 161 pips. So that does tell me that yes, you've got some potential of a breakout using power. That may be a favorite place for a breakout and for some buying power to kick in, especially in that kind of price as well, above the psychological level. Then if we can find more bullish single mother candles, then the higher the chances of the breakout or the buying interest at that level. Okay, so hope that makes sense to you guys. We're still talking about Euro USD. You haven't even gone to the rest yet. So if I were to just use that, I just want to check the current price now. We've got some appreciation of price here, but did it actually appreciate with a single bullish candle? You've got one right there as well, and you've got another one right there. This one we don't really count, it's not too high on the upside, but we've got another one there. So we've got about three. Now I would say between that one there and that one there, let's look at the average pip for that one there all the way up is 152 pips. So again, you've got that average of 150 pips already now for a single candle. Now that one there right up there, there's about 72 pips right there. And then for this one here, from the current price to that, this is like a Morobozu candle pattern. That is about 160 pips for that one there. So we've got an average of anywhere between 80, 70 to 100. I would say let's make that 100, 120 pips average for a single candle. And that is actually quite good. So this is what I would like to look at. And also the other thing is it looked potentially like there may be a divergence as well. Now we just have to wait. Okay, sometimes divergence is good because it's a correction, it's not a change of trend. So if it's a correction and then it comes down, it's just getting a little bit of power basically, and then you want to look at it going up, because there's no guarantee that it corrects here and then once it breaks, and then if it goes up and it goes up above the two lines, it doesn't correct again, because usually upon a breakout it corrects, right? You guys know this. It corrects to the point where it has broken out, and then it'll continue its way again. So corrections are good. Corrections are building momentum for the price action as well. So this is good sign. So that's what I can see. I can see that this is basically what we could expect. But if in case of a breakout to the upside, of course, is something along the side of the trend. Current trend is to the upside. So potentially you want to look at riding the trend to the upside so you know what to expect to the upside. The other thing is that what if it's break downwards to the downside, breakout to the downside, then you have got this already bearish candle that is the most recent one, giving us a bit of an indication that if it at all would like to prefer the downside, maybe there's a catalyst, maybe it's a catalyst, meaning a driven factor by the news or something happens, let's say, right? It might actually ride along this bearish candle body right here, and that is a potential to actually drop right here down to about at least 100, again about 130 plus pips. So that means that we want to always expect the unexpected. I'm not saying that you can actually, you should trade anti the trend and all that, but we want to ride the trend, right? But we just want to expect if, for example, there's something along the side of ECB, the president or something says something, or because of something, the ECB had to announce something, and that something has not been absorbed positively but negatively instead, then you know that the downside has got the minimum fall of that. Okay, so that's why we want to always look to the left, but we want to look to the left, recent left as well, and then we want to see that that is a potential only, probable thing. We want to always be prepared with either sides, right? But of course, the preference is to write the trend, which is currently an upside probability, which is bullishness. Okay, so as it goes, now this is still a daily chart we're looking at. Okay, we're not trading long term, we're just looking at more data on the daily chart so that we can break that down into smaller bites on the lower time frame. So here, upon breakout, we have got a single bullish candle right there as well that has actually reached, I would say, the closing price of closing candle right there at 1.1541. Again, it is very close to the 1.1550. So it is giving you a hint that if the breakout goes outwards, we need to also check to the left. There is a potential of that 1.1541 as your first stage. Maybe the trend is getting stronger and stronger and stronger, but it doesn't mean that you need to actually look at per time 100 plus pips, 150. It's good to also look at correction side of it, and I like to ride the trend but then get out when the correction happens and then get back in again while the correction ends off or cools down, and then you go on for second stage. That's why I like trading in stages. So in total, I might get 200, 300 pips based on the 4-hour chart or whatever, but then I'm going onto a lower time frame to actually gather those pips up. Okay, then you've got a longer marathon to play. That is why I look at it from daily chart, just to get your idea on the trend, the strength of the trend, so that you can run a marathon of trades. Okay, you can do your scalping, you can do your short term or whatever, but then you're based on a collective amount of total pips based on the daily chart, for example. Then you are trading in stages with whatever strategy and style that you want, long-term, short-term, scalping, whatever you want, and you then know that the market can give you potentially that amount of pips, because we can only get or hit TP for the amount of pips that on average provided by the market. We cannot ask for it. We are only taking what's been given, right, from the market, because the market takes and the market gives. So this is basically it. So where we go, right now, we've also got all these bearish candles on the downside. So I've got these two lines right now, okay, above the breakout point. Above the breakout point of 1.1450, then you've got the upside move potential to 1.1540 at least, and the minimum. You can take 30 pips at a time, 20 pips at a time, or even more or less. Is entirely up to yourself. Okay, on the downside, that is your hidden thing, the potential. So here, for example, we are looking at a layout of price right there. You've got your breakout area. So I will put in a box. Okay, right, that is your price at the moment. Euro USD trapped in between these lines. Okay, it's in between, and it's at trading at 1.1437 at this moment of time. Okay, Reza, is that clear enough? You've got more questions on Euro USD at the moment? You're still on trading it on the buy, I think, or is that on the sell that you're looking at? You're trading the correction at the moment? Right. Iranian, I'll check that for you, Reza. I'm not entirely sure, but I can check, because we've got two entities. One is in Seychelles and one in Cyprus. So let me check. I'll get back to you. I'll message you on the GTI group. Okay, that's all right. Okay. Okay. All right. So who else are trading the Euro USD today? I think you've got loads of potential, right? And Euro USD. Now, the other thing I want to share with you guys is that if you guys use the tool MATAF, MATAF, on the correlation. So if you type on Google MATAF correlation, that means you can actually trade more than one pair just looking at highly correlated pairs, okay? Which basically means that if I'm trading Euro USD, I can look at Euro USD by time frame, like Euro USD here, right? Let's say I want the hourly chart, okay? And I can see that the highest number, if the highest number is positive, like 90 here, can you see? I'm looking at Euro USD and then I'm looking to my right. I can see the number 90, 81, 89, 93. So let's say it's 93 that I like because of the number, it's highest number, right? Let's ignore it. It's not percentage, it's their own algorithmic way of calculating the correlation. Okay, let's say we look at just the highest number. What this means is that because it's positive, you see some has got negative here, right? If it is positive 93, it means that the Euro USD and the AUD CAD, they move in sync. So if you are looking at a particular pattern on Euro USD, a particular geometric ABCD or harmonic or a particular setup or a channel, whatever it is, and you see that it is hinting you a strong uptrend, most likely you could see that on the 1 hour chart if you are looking at the 1 hour chart, because we have chosen 1 hour, the hourly here, you can most probably see the same thing on the AUD CAD. So because you can see the same thing and it's almost the same or similar potential, because they are correlated positively, okay, that means if you're on a buy on a Euro USD, then you could also be on a buy on the AUD CAD. So that means instead of opening just one trade, you can actually open another trade and have that as your balance output. Okay, so the other thing that people can actually do is that even though it is going up the same way on the upside, let's say, and down as well the same way, you can actually have one on the buy and one on the sell if the market is really risky. Okay, so at least if you are buying the Euro USD and then you look at the chart and the chart just disappointed you because you are on the buy and then you've got a reversal, that but then you are selling on the AUD, most likely you will gain on the AUD. So instead of getting Euro USD, one on the buy, one on the sell, you can actually have one on a buy on either one of the pair. Okay, you know what I mean? Yeah. So Euro USD you're on a buy, AUD CAD is on a sell. Depending on your strategy, but the most important thing is you can use a correlation in any way you want, but the ultimate outcome of correlation is to diversify and have more pairs to trade as opposed to just one type of pair. Let's say one pair Euro only Euro USD, and then you open five, excuse me, 5, 6, 7 positions, but they are all Euro USD. That means you're not diversifying at all because this is whether you are buying one, selling one, or out of 10 you are buying 5, selling 5. This is actually still very, very risky because sometimes if it's not done properly, you could actually lose your capital just because you have multiplied all your losses on one pair. It's still considered one pair. It's not considered 10 pairs. If all of it are Euro USD, it's considered one pair. Okay, only your positions are different. Someone buy and someone sell. Okay, any questions, guys? You guys are okay so far? So far, so good. You know about this correlation, right? Okay, so if it's negative, then the Euro USD is moving total opposite direction of CHF JPY. So that means if Euro USD is on a bullish run, then potentially CHF JPY on the bearish run. But we are not picking this pair right here to correlate whether it is positive correlation or negative correlation because the numbers are too low, 12. Okay, so if it's negative 93, we can still go and compare. But again, we don't just use this straight away. We want to always confirm with our own eyes, ourselves, and look at it in the chart. So here, Euro USD, for example, as I've mentioned, AUD CAD, right? So now let's look at whether or not this is proving to be a positively correlated pair, AUD CAD. So I'll put the AUD CAD right beside the Euro USD. I'll also put in the same time frame. Okay, and we will go, we'll go to the right. Okay, so now let's look at what's going on. It's said to be positively correlated, correct? So we want to make sure, but just now we looked at the 1 hour chart. So let's look at the 1 hour chart then. Because the 1 hour chart shows 93, maybe the 4 hour and the daily, it's not 93. So let's go 1 hour on there and also 1 hour here. Now, look at the movement right here. Okay, and then now look at AUD CAD, right? Does it have similarity? Yeah, definitely, right? So as you can see, it moves even almost the same way. We've got that there, like that kind of shape J right there, and then on the AUDCAD you've got that as well. The way it moves, following the three EMAs exactly the same. So we can see that AUDCAD may be experiencing the same thing to break out. But look at the price itself, AUDCAD 0.953738, right? But then on the AUD/CAD, we are already seeing a long wick right there, which actually means that there's a big potential AUD/CAD might reverse with all that price action on the single candle. So because of that, it may be an indication that Euro USD may experience the same, which is already experiencing it at the moment. All right. So there you go. We've got it correcting already. But again, AUD/CAD on a 1 hour chart has already hinted, lowering interest of buyers going in. So it's weakening, it's exhaustion. There's a bit of exhaustion with a candle right there. So it can actually be AUD/CAD could potentially be a leading indicator for the Euro USD on the 1 hour chart. So whatever that is happening here might actually help you predict what may actually happen for the Euro USD as well. Okay, especially with the candles right there. As you can see, it's really clear that it's got exhaustion of buying power. So here, but the thing is that we don't really see on the left whether they've got any significant selling going on for AUD/CAD. We've got one here, yes. So again, it's just right there, and it's quite a strong, significant sell because it went down significantly. I mean, just from here right to where we can see alone, it's already about 464 pips down. So with that, we can always use this area here, which has been marked by very strong bullish and bearish candle right there, which is a railway track type pattern, they call it, okay, which is a very strong indication of reversal right there. So we can always put a border line at the top as our resistance level at 9540. Okay, so 9540 exactly. It's only 10 pips away on the dot of the 9550 psychological level. So there you go, guys. Okay, you've got a little bit of a tip right there with a correlation table that you can actually use. It's free of charge from mataf.com. Okay, guys, so shall we proceed? We want to look at things I've posted as well, because we have been looking at opportunities. I've been riding it along as well. But very interesting moves with NZD, if I'm not mistaken. We have got lots of upward movement. This is on the 4 hour chart. Okay, so for those who like to trade the Kiwi, NZD, got lots of movement to the upside, but again, we want to always peg AUD and NZD together. Okay, so when we peg them together, we can, because you see the movement of New Zealand's economy and everything else, policies, monetary or fiscal and all that, is actually mirrored by Australia. So it's mirrored with Australia. So then whatever that happens in Australia, New Zealand is like a small sister or a little brother where you follow the big brother, and big brother is Australia. So anything that happens there, it takes a little 2-3 steps behind for New Zealand to actually follow Australia. So you want to be really careful with that. Okay. So if it's on the upside, for Australia, maybe it's on the downside for New Zealand, but then this downside may not really maintain itself too long, because it might actually then catch up with Australia as well, and then you don't have that parity too much of very strong, very weak, So hence the reason Australian dollar and New Zealand dollar, there are people who trade them, but I find it a little bit challenging sometimes. You need to be good with scalping and other techniques and strategies, maybe with that. And also maybe people want to do carry trading, which basically means when the market is up, they earn the interest only on buy trades. Okay, so this is what they do with Australian dollar versus New Zealand dollar. But what is interesting with New Zealand dollar is pegging it or pairing it up with Asian currencies, especially JPY, of course, and also there are safe havens as well, and like JPY or NZD, JPY, NZD, CHF, because they like looking at all these exotic type currency like New Zealand dollar, and then pairing it up with safe havens like CHF or JPY, especially in COVID times or when there is a risk of China-US war tension, stuff like that, then they might like to do that. Also because there's a lot of trading money between the bridges of China and New Zealand, China and Australia, China and Singapore. So we've got all this going on at the moment, okay? So any questions, guys? You guys are okay so far? So far, so good? All right. Where shall we go? Let us just do this a little bit. We've got Euro USD there. We've also got Euro CHF. Euro CHF seem to be, reasonably bullish right there, as you can see, Euro CHF, and also AUD CAD. Okay, so we can actually look at that. So far, so good. I think I've missed out Euro USD for Reza just now, and then Reza, you mentioned a little bit about gold as well, right? So we can take a look at gold first. Okay, let's see. Who amongst you are trading gold at the moment? Anybody trading gold so far? I've not touched gold for a long time, but it may be coming soon, the timing for gold. Now, I have drawn a pattern right here. We've got a geometric ABCD pattern. And the earlier buy at, I can't even remember when, it was above the centroid area. So I have gone on to my buy since 1722. I still got holding positions on gold. And it has appreciated very much. So I have moved my stop loss as well, and I have capped my loss capabilities. But then some of it I closed already, and then I just want to multiply the winnings, especially the profits on gold. So now it's trading at 1804. We have got that area I've marked at 1814.79. Waiting for a breakout above the 1810 to 1815 area, and then I may be wanting to aim it at the 1864 area. Okay, that's for gold. Let me just check. Oh, good. Okay, so it is doing quite well. I think it's just that it's correcting. It's doing a little bit of correction on the 4-hour chart. It's clearer to see it on the 4-hour chart sometimes for gold. And it does actually depend on what's going on with the pound. Okay, so I want you guys to also look at the pound, because the correlation between gold movements and pound is still there. So whatever that's happening, not per se GBP USD only, maybe certain other pair like Euro GBP as well, because we've got a lot of holding gold, a lot of gold orders, a lot of holding gold in the Eurozone. We've got a lot of holding gold in the US, of course, but collectively, in terms of official gold, we have about 35,000 tons of gold in the whole wide world, official gold in the central banks and everywhere. Okay, central banks, government holdings, everything else. It's all under formal. The black ones, I don't know. Maybe more, maybe less. I don't actually know. But then for official gold, about 35,000 tons. Now, out of that 35,000 tons, the largest holder of gold is actually the Eurozone, because it's made up of 19 countries. And as you guys probably know, you have got the UK holders of good amount of gold, physical we're talking about, in the central bank, as a collateral with all the risky assets, or even with fiat and everything else. Okay. So we've got the UK, and you've got France as well in the Eurozone. Italy not very high maybe, but some other countries very high. So collectively, the Eurozone has got the largest holding of physical gold, then followed by China, and then followed by the US. US, China's like this, I think, and then Russia. So US, China, Russia is like three, on parallel in terms of the level of amount of physical gold. Then on top of them is the Eurozone as a whole. Okay, so this is what's going on, and I mean, realistically, this is what I believe as well. All these superpowers, we call them the elite group, elite countries like Russia, China, US, and all that. They are the ones responsible keeping the price of gold really low, mainly because they are still collecting. Because they're still collecting, they're still buying for their personal, I would say, not personal use, for the governments, for their governments, central banks, and all that, because they need to hold gold as collateral, and it's been termed as actual real money, gold. Okay, in order to, because the yield is zero, so the yield is 0%. It's not negative and all that like fiat. So it at the end of the day, if something is negative, what is zero is still better than negative. So that means that the gold still has value. So even though they have bought it cheap and they are making us basically trading in sideways range, and then it goes up like that, make you really excited, and then after that it goes down. That's the main reason why, is that they are collecting gold on a big scale, and they want to get the biggest share out of that 35,000 what do you call that, tons of gold. Okay, official gold. All right, so there we go. So this is gold, and let us just go a little bit to the back, to the left, and to look at whether or not we can get a lot of hints. Now, whatever that's going on in terms of action in the gold market, especially gold XAU versus USD, is actually from, let me just show you. From 2011, okay, and until about 2013. 2011, 2013. The reason why I say that is because it can be reflected by what you can actually see right here. You've got all that, we call it distribution in the, not accumulation, but distribution cycle. You've got three types of cycle in any market, especially financial markets, right? The stocks or indices, equities, forex, whatever it is, it's always going to be starting with sideways, small sideways. It's called accumulation. Okay, small sideways, and then it shoots up big and it goes up. That's your uptrend. And then before turning back down, it usually creates a cycle, right? Like a parabolic cycle. But at the very top, it's another sideway, but very volatile. It's called distribution. So that is the distribution right there. So you had an up distribution, and then it came down here. It created again another up distribution, come down again. But then at the leg area, you have got smaller sideway, which is called the what do you call that? The accumulation. So we had accumulation a little bit here as well. So there you go. So here, for example, we have had all this movement here, correct? This is your distribution area. But unfortunately, for gold, if we were to refer to the left, we can only look at this area here of a couple of years only movement from 2011, 2013 roughly, or before 2014. So we have got all these area here that can only be our point of reference. So we need to pay a lot of attention to this area here. And as we can see, the price at the moment, it's respecting some area right here. But when I say we have to look at this, we want to see the point of breakout from 1815, at where the price is now. We do have some bullish candle, but as you can see, the bullish candle and does not end very highly. It's not very big power. So again, it might trick the market again as something happens. Let's say coronavirus, something here and there, and then the flow of money will go into risk, a what do you call that, risk off type safe havens like JPY or CHF. Then gold will go up as well, right? But here, from using this as the point of reference, I don't see it, having a very strong type candle going upwards from this end. But if prices were to break out going a little bit higher, uh, then you might find the potential of it to reach the 1864 area. But I don't see it going anywhere higher, because you've got the highest single mother candle right there is at 1880. But I'm just very, very skeptical of it going too close to the peak area right here. This was a very traditional double top here as well, guys. Yeah, so that double top there of the price went up, created a V, and then boom, it went down. It went down all the way down after that as well. So you see the appreciation of price right there, and then it went down all the way. Okay, so I want to be really careful with trading gold right now. That's why my favorite instrument is gold. I've been trading it for a very, very long time, both physical and also online. But I'm very careful at this period of time, mainly because there is a little bit of a war that people don't actually see. It's a war in trading very highly risky currencies, and also hedging it with cryptocurrencies as well. So but we do have a bit of a war with the liquidity level of cryptocurrency traders with risky trades as well, because they're hedging it. So hence the reason they sort of lay off from the gold and the silver. I mean, if you look back many years ago, there's probably much more traders who are trading gold. Maybe now they are more trading currencies than trading gold and silver. Okay, and also now they've got more and more building up population of crypto traders as well. Okay, so this is why. And with that, we want to look into, let's say, oh, sorry, just want to go back and pay attention to the area I've just mentioned earlier on. Here, for example, as it breaks downwards, we have got all these stronger downward, stronger mother candles below the 1798. I've actually looked back and looked at the daily chart and the 4-hour chart, and then I've noticed that under the 1798 or the 1800 and below, if I look back, I see that you've got more powerful, longer mother candles than you have bullish candles. Okay, so that is where I'm really skeptical, because that does actually tell me that if the price go lower, it can actually even go even lower. Main reason is people want to still buy low and very low. And who are these people? The bigger boys. The bigger boys and the bigger people with power, they can actually buy more with bigger amount of money, right? So when it goes down, it will go down like falling rock, because they're selling off, and then they are buying it, but they are buying it from the people who are selling it off. Okay, so that is basically it. And the more they buy, the more the sellers are basically selling it off. So this is why it's going to be a little bit tricky with gold. I think it's still not yet the time. So we don't know when the time is until it will really burst out. I don't think yet. Not sure when, but I don't think just yet. Today, tomorrow, I don't think so. But it looks like it's got this potential of more falls. But let's look at trading in stages, and don't get overly excited with the buying of gold. Even though you see that, even though you think and guess that it may actually just burst out because of the long candle that has actually broken out. If you really look back to how it has been for the past 6 months to 8 months, the breakout of a single mother candle bullish has never survived very much, not like last time. Okay, maybe a couple of years ago, you can still see a breakout of the single mother candle bullish, and then another single mother candle bullish one, and then it carry on, and then you've got smaller ones, and then carry on again. But now you don't see that so much. You see breakout right there, you see one single candle, then it starts going sideways. You got some smaller candles going up, and then the moment you see a bigger one like that, it takes you through, but then again it goes sideways again. You see, so there is a bit of a control. It's like bringing your dog for a walk. You've got a leash, so there is a leash onto gold's prices by the big boys. So don't get overly excited with the buying. You can buy in stages, but try to not have it like that. Okay, so there you go. Okay, guys, that is basically it. Any questions at all? You guys are okay so far? The pattern is ABC. Yes, correct. This whole yellow one, yes, it is the ABCD geometric pattern that I see it happening. I've been buying ever since the central area right there. So it has gone up really well. And that is your ABCD yellow pattern. Yes, I'm expecting it to reach this area here upon the breakout here though to 1861. Okay, 1860, let's say, or 1855. There's a bit of a psychological level, 1855 right there. And not the same psychological level as your psychological numbers. Okay, so there you go. So there you go, guys. And any questions at all? No questions? Sorry about that. Okay. Questions? Okay, good. Okay. All good, brilliant. Yes. ABC pattern. Yeah. Thank you, Pratap. Okay, guys. So that's it for now. Look it out for more. Look me out for more patterns and trade ideas, of course, and also in the GTI group. I mean, people like Reza, every other guys and members, most of the members there are sharing lots of trade ideas as well. You can come to me, DM me directly as well, and we can take it from there. Okay, anytime. All right, guys. With that, I want to thank you guys, and we'll see you guys again tomorrow. Okay. Any questions on the Telegram group and with screenshots preferably, and we'll take it from there. Take care, guys. Have a very good evening, and we will meet again tomorrow. Bye bye. You too. Take care. Bye bye.